You've been to the market and you saw many properties. And of all the properties you have seen, you managed to find 3 properties that are really beautiful. But not only they are beautiful, but they gives you positive cash flow. So how are you going to decide of these 3 property, which one are you going to buy? What kind of criteria should you use to make this decision? So this video is about that. How are you going to make the decision to buy the best property to give you the best return for your money? And not only that, watch this video right to the end, because there's a bonus tip that will help you to make great decisions in buying property. Hi, my name is Calvin and welcome to my channel. If you want to be financially free and retire early and also learn about wealth creation strategies, start right now by clicking on the subscribe button here and clicking on the bell so that whenever I come out with a new video, you'll be notified. Come, let's talk about our topic for today. But before I talk about really the criteria that you should be using to choose which positive property to buy, I think it's better for us to move one step backwards and define what is actually a positive cash flow property. So in a nutshell, in summary, what it does is that this property, the rental income, the monthly rental income from this property is more than the monthly expenses. And what it means is that every month, this property will be putting money in your pocket instead of taking it out. And it's a good property to buy. And I have actually a detailed explanation video on this, and it is up there. Watch that video so that you know how we calculate this monthly cash flow. If you've been following my videos, you will know that I have a little mantra, especially when we talk about property, about which property to buy, is that the numbers must make sense. So what it means is that the numbers, all the way you calculate, it will help you to evaluate a property objectively instead of being affected by emotion, by look how the property look, by the location of the property and things like that. So by using numbers, then you can become a bit more objective in choosing which property to buy. So again, today we are talking about numbers, and that number on how you're going to choose. If you have confronted with several positive cash flow properties, how are you going to choose which one to buy? That number we're talking about is called cash on cash return. What is cash on cash return? It is the return of the money that you put into an investment. So let's use the example, then probably you can understand better. So let's say you have $100 and you put it into the bank, and the bank will give you a 2% interest rate. And therefore, at the end of the year, for the $100 you put in, you'll get $2, 2%, right? Or if you go and put the money into the stock market, into an index fund or something like that, and they can give you a 6% return. So what it means is, again, for the $100 you put in, at the end of the year, you get back $6. So that is essentially a cash on cash return, which means the money you take out, what is the return that you get back for the money that you have invested inside? In order to help us to understand the concept of cash on cash return, I think it's good to use some examples. And let's use an example of this property that you see on the screen now. And this property, again, for us to have round numbers, then it's easier to understand, easier to explain as well. So this particular property that we have is, the cost of the property is $100,000. And we are going to take a 90% home loan to buy this property, meaning I will take out 10% to pay for deposit as down payment for this property itself. The monthly expenses of this property is $683, and it consists of the mortgage payment, the insurance, the taxes, maybe even the HOA fees, and all other expenses. And for this particular property, again, let's put a round number to the rental income, and it is $1,000 per month. How do you calculate a cash on cash return on the property? Well, it is annual cash flow. Remember earlier on, the example that we're talking about monthly cash flow. Well, now to get annual cash flow is monthly cash flow times 12. And that's how you get annual cash flow. Annual cash flow divided by the money that you have invested in, the money that's out of your pocket. And that's how we calculate cash on cash return. I'm going to use the slide so that we can easy to see on the screen because numbers, sometimes speaking is very tough. You got to see it on the screen itself. Again, okay, on the screen you can see the cash on cash return is actually the annual cash flow divided by the invested cash. So again, we use back the illustration we had just now. You have a monthly rent of $1,000, your expenses is $683, and therefore your monthly cash flow is $317. Times 12, that's how you get the annual cash flow, and that's when you get $3,804. For the invested cash, there are a few components in there, and the one component is in the down payment, which is $10,000. So how do we get this $10,000? It's because just now, as we mentioned, in order to buy this property, they took a 90% loan, and therefore you come out from our own pocket the 10% as the down payment. And of course, in buying property, there are closing costs involved. This involves things like the legal fees for the transfer of titles, the legal fees in getting the home loan. This is unavoidable, yeah. And I put in the number 10% as a closing cost. But again, this depends on the country where you're from. Sometimes it varies. Some countries you can get 5% is a closing cost. But in this case, for easy calculation, I've put 10%. And therefore, your invested cash, money that's coming out from your pocket, is $20,000. So the cash on cash return, which is that $3,804, divided by $20,000, your cash on cash return is 19.02%. And you can see 19.02% is definitely much better than putting money into the bank or even into the stock market. So there you have it, cash on cash return, right? So you look at the cash on cash return on the different properties that you have, and then what you can see that number, and from there, whichever that gives you the highest number, that's the one that you will decide to buy. If you're intending to buy a property, then I have made a video on some of the important things that you need to know, and that video is up there. And now for the bonus tip. Do you know that the cash on cash return that we're talking about, it can be infinity? You look at it, hey, what are you talking about? Well, remember our calculation on how do you make cash on cash return is annual cash flow divided by the money that's coming out from your pocket. But imagine that the money that's coming out of your pocket is zero. Not possible, right? Well, it is possible. In order to pay this down payment, in order to pay all the closing costs, the money isn't coming out from your own pocket, but from the bank. You actually take another loan from the bank to pay this. That means there's no money coming out from your pocket, right? So therefore, annual cash flow divided by zero is infinity. And that strategy is even better because you can continue to replicate this buying process by not using any money from your own pocket. And that strategy is called no money down. I also created a playlist of several videos on buying property, whether is it for your own home or for investment property, and it is there. And don't forget to subscribe to my channel up there so that whenever I come up with a new video, you'll be notified.